Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertold, that knowledge is flotation. You wanna learn? Well, you came to right place. You're pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Kenny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC, a superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
A whole lot of truth, no financial advice. I'm aware it's Halloween. I'm aware I'm playing some other type of music right now. Wow. What a super chat, huh? I think I can break from the buying Pokemon cards for a month. Thanks from out there in Canada, Brian. Thank you guys so much. Wow. I didn't see that coming. Appreciate all the love and support for the channel, guys. As always, you guys know that we give back to the kids as much as we can. We did a lot for the kids yesterday. I went to GameStop and bought some Pokemon cards. About, goodness, 120 packs of Pokemon cards that we're going to be giving away for Halloween. So the plan is to give away Pokemon cards all Halloween to everyone who comes to the door today. My wife said, "You sure?" I said, I'm positive, babe. The kids are going to love these cards. And then I bought myself some, I bought the 2 little packs for my wife of Lorcana, but that was it. We're just doing things the right way, and bought some other cards, guys. Bought some packs. Talked to GameStop. I actually talked to the regional, or the I want to get the right title. I believe she's the district manager. I've known her for 12 years, and I talked to her about the company and the transition and the pivot and the expansion on categories and what it does for business. So we have so much to talk about today. We are going to investigate today. We are going to investigate Carvana and the root connection. I have a strong feeling about this investment, about this company called Carvana. I feel that it's private equity. I feel that it's a play. I feel it's a pump and dump. I believe that what they're reporting to you is not normal. Almost like Nvidia, where it defies the whole market and it defies common sense. But as you can see, announced today, the company of the semiconductor chips, the relationship with Nvidia, the 4th largest, I would say, supply chain person. 11% of the company, all their orders, 11%. Think about that for a second. 1/9. Basically, of their total revenue. That company just fired their auditor, and they literally are down millions of dollars instantly on the stock. So I'll be investigating everything. I'll be showing you everything I've found so far. And I found stuff, right? So let's see. That was the SMCI, the semiconductor group. I had to put down some notes here from this morning. I've been studying people in companies and relationships, and I finally decided, you know what, I'm just going to go live. I waited long enough, and it's absolutely a scam, for the lack of a better term. It's from me, but that's just the way it goes down. Market's feeling spooky today? Yeah. But Jody Messina, I had her playing. I was listening to country music this morning. That's why I went with it. Obviously, it's not part of the theme for today, it being Halloween, whatever it may be. I'm dressed up as a full-blooded American. See, I'm not garbage. I get heated. I get excited. I got my Dodgers shirt underneath here. It says Dodgers, okay? I got Dodgers on, babe. We won the World Series last night. I'm supposed to be pumped up. You guys know I didn't go live yesterday? Let me get out of the monotone that I'm in. Let me get it out. Hold on. You guys know I was supposed to go live yesterday. I was going to go. I came home. I go, babe, I'm going live. I'm going live. She said, okay. I said, hold on, just let me see. The Dodgers are already losing 5-0. What does it matter, hon? We're coming back to L.A. We're just going to win on Fernando Valenzuela's birthday. Forget all this nonsense. I said, you know what, babe? They're going to win it in 5. They're going to win it right now. And sure enough, not only did they win it in 5 games, okay, they won the World Series in 5 games. In the 5th inning, they scored 5 runs. The MVP of the I don't want to say the NC. I was going to say the NCAA. No, the MVP of the World Series is number 5, Freddie Freeman. I'm so sorry, Free Cash Flow Freeman. No, it's Frederick Charles Freeman. The number 5 just kept talking to me. I said, baby, I got 5 minutes. I got 5 hours. I got $5. I got 5 shares. You guys know that I bought 90. What did I write down here? 93 shares this month of GameStop. Legend. I could just go get the other 7 and just call it 100 for the month, but I don't care. I'm chill. I'm good. Over 900 something shares. You know what? I'm going to show you what we're sitting on and why the position just keeps growing and growing and growing and growing. It feels great. I finally got a lot of my finances figured out, that I'm able to put in a little bit more, 2 shares a day instead of 1. But I've been projecting out for 3 years, 4 years. It's going to go up even higher. We're going to get up to 5 shares a day once my damn car's paid off. Like, I already told my wife, I said, I'll split the difference with you. I'll take 2, you take 2. The car's $450. Where's the other $50? I don't know. It's all in my pocket. But I'm just saying to you, I've planned out every dollar in my life a long time ago. Like, I've been doing this for years, the way I budget. And I became diamond-handed on GameStop because it just looks like the best investment of my lifetime. Like, and I know other people don't see it that way, but there's just so much to talk about, right? For the last 5 years, 4 years. But people call you a liar. People say things about you. Smear campaigns on the internet just proves that you're right. I give it no attention, guys. I'm aware of the smear and the hate that people come up with. There are YouTubers paid. Think about this for a crazy second, guys. I am no one. When I say I'm no one, I'm like you. And are you no one? No. In the world of the internet, in the world of content creation, I'm a small corner of the pocket of the internet. Very small. And for whatever reason, people, aside from harassing me personally and trying to intimidate me and trying to tear down my platform, all of that, there are people paying people to make content and produce content about me. They're literally paying other YouTubers to make videos about me, to do a smear campaign and talk. Who's watching that? I have no idea. I was like, somebody paid for that? Wow, that's embarrassing. But hey, anybody will do anything for money, apparently. They're hard up. So that meltdown is something else, man. They have to wake up and look in the mirror. They're miserable people, and that's okay. I was told a long time ago, not everybody wants to see you win. If you're watching, I'm sorry, but you're going to see me win. Okay? I'm going to win. But the worst part about it is I never know who's watching. I never know a damn thing. But hey, we're going to get this show started. I appreciate you guys. And tell me who's watching. I got to come back. Then I got to take off. Then I got to come back. All the good stuff. Why? Because I still live my life around YouTube. It's not just YouTube, right? It's not just the stock. It's not just GameStop. I'm going to go shopping right now. I got to take my daughter to get her a new car battery. It's more important than anything we're going to talk about. Just remember that. The song slaps. I was busting moves. Thank you so much. Just one more share. Just one more, Chad. I hear you. At $22 and some change. Guys, let's talk about a lot about the market. So I want to get through this stuff first before we really investigate Carvana and Root and do that whole deal. Let's talk about a couple things. First, Meta. Meta missed on earnings. You know what, guys? Let's do this. Let's show it to you. Pull up my charts. Okay, here we go. So let's go look at Meta really quick. If you guys are not familiar with Facebook, this is Meta Platforms. They missed completely on earnings, and this is what it looks like on their hour chart. Went from 609 all the way down to 566. They're already down around 10% almost from what it was after the market closed yesterday. They announced their earnings, plummeted all the way down. Another one that missed earnings is going to be Meta. The other M word is going to be who was the other one? It was M&M, Microsoft. Oh my hell! That's how I know. I go M&M, right? Meta and Microsoft, they missed yesterday. And then today's earnings are going to be A&A. Not Adam Aaron, not Alcoholics Anonymous, but actually Amazon and Apple. So that's how you remember stuff, or at least that's how I do it. And here's Microsoft. Came out at 444, all the way peaked down, and now it's down again, like I said, 10%. These guys are dropping like bad habits. Now, what this is going to tell you, because they're the bulk, right, the Mag 7 stocks, they're the bulk of the NASDAQ. So they carry the NASDAQ index. So NASDAQ will be down, and S&P will probably be up still because there's other stocks holding up to S&P. So are we going to be true on that? Is it really going to come out that way? We can go look at the QQQ. So this is going to be QQQ. And there it is. So NASDAQ's completely down from 501 all the way down. And that's because that's what tracks. You know, the ETF that tracks the NASDAQ is a QQQ. And then when you go look at the SPY, that's the ETF that tracks the S&P. They're still down. So it's mimicked the movements itself. They're heavy. These are some heavy hitters, guys. Microsoft and Meta are heavy hitters in the world of investing. We're talking about a combined market cap of over $4.5 trillion. Yes, when it goes down, the world notices. So you'll feel it. You'll feel it on a lot of investments here. That's why GameStop's going to go down, you know, as far as leverage goes. And it's okay. I'm okay with whatever happens to markets. I'm not even interested. It doesn't work that way for me. I know that there's an election a week away, 6 days away, whatever it may be, and people think that has bearing on the markets. I've told you in the past it does not for me. Let me go put this on my watch list here. Can I do it? Yeah, there we go. So I put Root on my watch list. Meta should already be on my watch list. I took it off before. Microsoft not even on my watch list. Wow, it's phenomenal. And then the Container Store, definitely not putting that on there. But Russell 2000, so it's going to be the small caps, right? It's still moving the same way. So you wouldn't even know that the economy or that there's 2,000 other companies in the world. They all move the same because it's so uneven. It's just not equally weighted. And so all the small cap companies, all the mid cap companies, everybody goes down with this market. That's the way it is. That's the way it's going to be because they're too heavy. And when is it going to rebalance? When is it going to become even playing field? It might not ever. It might not ever. But there are some companies that are moving up and moving down. So I told you about MNSO. I still feel good about this investment from $14 all the way to 20 something plus, and now settling around 1950. But yeah, this is a great investment. It's almost like GameStop. Just GameStop's a lot different, and what I mean by a lot different, look at this, guys. That is the biggest bullish pennant of your lifetime, to have a rise all the way up and then to get pushed down, just topping down. We break out and we're pushed down again. We'll have another breakout. Another massive breakout is coming for GameStop. I called it for my birthday, which is in 2 weeks, November 14th. I feel good about the breakout coming by then. And is it because it's tied to me personally? Absolutely. It's because God speaks to me every day. This is just the life I live. If you guys don't know it, I'm immersed in faith on this company and on this stock. And if you're not, that's okay. You're just not me. You're just not part of this cult called GameStop. I'm in a cult, babe. That's what I am. I'm just dumb money. I'm just dumb, deaf, dumb, and blind. I don't know how to invest. I don't know how to read charts. I don't know anything about macros, and I know nothing about economy and economics. I'm just a dumb guy. Oh, man. Hi, guys. Can you connect the dots? Because I can. All right, so check this out. You know what? Well, while I'm at the store, I think I'm gonna surprise my wife, and I'm gonna buy a power washer. I've always wanted a power washer, and I think I'm gonna get myself a power washer for my birthday. I want a power washer, and I want to buy her like a shampoo, something for like how wives always want to shampoo the carpet or clean the upholstery or something. I got to get somewhere it has a clear top where you could see the dirt coming out of something. My wife doesn't believe anything's clean until she can see it, right? I swept the floors last night and I mopped the whole house. Guys, by the way, 3,000 square feet, whatever the hell my house is, I don't know. It's a lot. It's a lot of tile. a lot. I don't do the hardwood, but a lot of tile. And I'm right there just with the Swiffer, just scrubbing and scrubbing. And I'm just like, all right, got to make the house clean before Mama gets home. Because I'm trying to watch the World Series. And I'm like doing it. And then my wife walks in and she looks around. She goes, smells good. I go, thank you, babe. Thank you. No, it was. So there we go. Nvidia is down 5%. I hate to tell you I told you so. I hate to do it, guys. I hate to do it, but we'll talk about that too. Don't worry, I'm going for it. Okay, so let's go look at the stock that's just going to the ground. Well, first one I want to look at is Xerox. Okay, let's hold a moment of silence here for Xerox. If you guys are not familiar, Xerox all the way down to $8. Guys, this is the stock that they told me to buy when I was getting out of high school. Okay, when I was getting out of high school, we were in economics class. We had government economics. We learned a lot about nothing. They didn't teach you anything, but there was some wannabe smart guys in that class. I still remember their names. I don't want to say them out loud. These dudes went to MIT. These dudes were very intelligent. I was surrounded by them. And I was just like, wow, okay, well, you're smart, you're smart, you're smart. You guys are all going to four-year universities. Marantz, what are you doing? I don't know. I'm going to go to this school over here, and I'm going to go to, actually, I'm going to community college in the summer. I'm going to get my ass over to Fullerton, and then what are we going to do? I don't know, join the Army? Who knows? Who knows? But they told me to buy this thing, man. I'm going to show you the chart. So this thing was amazing at one point, right? But let's go to the yearly report. Let's go to the yearly. Okay, so this is on a yearly chart here. So at some point in 96, 98, 2000, right here. So 99 to 2000, the dot-com bubble, it was over here at like $100-something a share. It just gone out of this world, Xerox. And no matter what you thought it was coming back to, it never made it back. It never made it back, and that's unfortunate because now you had a rise in this stock in this company in 2017, and now it's coming all the way down to all-time lows again, back to the lows of a decade ago. So Xerox looks extremely unhealthy. It's a $1 billion company, and it looks like it's losing money every chance it gets. So, or market value, I should say, or but what I know about market caps. So anyway, down. That's all I know. I know they're down. So, pandemic, that whole year in 2020 fell down, and you coming through. And this is a monthly chart, guys. This is a weekly chart. It's hard to recover those numbers. Might never get them back again. That's Xerox. Okay, I just want you to know. So thanks for telling me to buy it. If I would have bought it, I would have lost everything. But the truth is, if I would have bought it, how could I buy it? I didn't have any money when I was 18. What the hell? Eli Lilly, the bubble's gone? It might be. But here's what it's looking like on the weekly. Here's what it's looking like on the daily. Okay, guys. Fell down, gap down, huge gap after an earnings miss or report or however they want to put it. From 972 all the way down to 848. Over 10% drop. There's still plenty of room for this thing to come down. I remember when this stock was, oh God, guys, what was it when I was talking about buying it? I talked about this stock my first year on YouTube. So it had to be way over here, probably around, I definitely talked about it in May. My first 2 weeks on YouTube, it has to be. Because I said, oh, Eli Lilly, man, I could have bought it at like 187, 182. I still remember. It was in the 180s. I know that for a fact. Because we were going to buy it in March. And it was me and my buddy from work. And we're like, man, look at this. They announced, look at this run that I missed. And this is the one that haunts me in a way. But I'm okay. I mean, nothing haunts me. I'm fine. But just this run. I missed it from here all the way to here. Honestly. And is the party over? Is it finally having a big enough candle down to where it's like reality's hitting in? It wouldn't matter. It would have to come down trillions of dollars. I mean, at this point, the market cap's sitting at $800 billion. It would have to lose half of that, and it still would be okay for the run that it's had over the last 3 years. And yeah, this is one where I knew I could have been in it, and I didn't. But just want to announce some of that stuff. Hey, I don't mind looking at things that I missed. Not at all. Because the truth is this. I have won a lot of things. I'm winning a lot of investments. I have an investment here that I've been in for over a decade. Okay, I've been in this investment for over a decade at Costco, and I can't even tell you I can't even begin to explain to you how much I've won on this line. But you figure I started buying somewhere around here in 2012, like right around here. I didn't buy it till it was like $100, to be honest with you. So somewhere in here in 2013. So that's usually where I started really raking it in. 2012, I didn't have any money. I wasn't making any money yet. Half my checks were gone. I was making like $200 every 2 weeks. But from that standpoint, from $100 all the way through, I mean, I've had a glorious run, and it's not going to end now. So I think it's doing well, and that's a good investment for me. But let's go to the one that everyone's talking about right now, or they should be. And this is a Super Microcomputer Inc., SMCI. This is the fourth largest consumer of products from Nvidia. And if we're looking at, this is the daily chart, guys. Not only did it gap down over the news, it's gapped down twice now. So it's still falling. So to go all the way from $50 a share, $49 a share, you have lost half of what the company was. Market cap of over $16 billion. The auditor quit himself. We'll go ahead and read the news right here as it comes up. It's going to tell you, is one of the most mentioned companies in the U.S. across all the news in the past 12 hours. And why is that? The server company's shares were recently down 33% after accounting firm Ernst & Young resigned. Now, you guys know that I've announced Ernst & Young to be a criminal factory safe haven as far as accounting goes. Every time something goes wrong, Ernst & Young is there. They're notorious for this, and we've talked about it on Connect the Dots. But Ernst & Young, they're oblivious. They look the other way, and then they just pay fines. They've paid over billions of dollars in fines, and it doesn't matter to them. And the Supermicro said it disagrees with Ernst & Young's decision to resign, but it takes the firm's concerns seriously. Well, there you go. So when you lose your auditing firm, there's a problem there. And this is the reason why Arthur Andersen doesn't exist anymore on consulting firms and these auditing firms. Because if you are KPMG, great. There's a big four out there: Deloitte, KPMG. I can't remember all the other ones right now. I'm somewhere else. But I'm just telling you, this is where you don't want to be. Right? This is where you don't want to be with what they're doing. And why are they lying on their financials? Because it's what I told you guys. These aren't real numbers. People aren't. Can I tell you why Microsoft missed? Can I tell you why Apple's going to miss today? And why Amazon, I don't know how they're going to win, but I don't really care about Amazon. But a lot of these guys are going to miss because it's what they call a down round, right? Are you willing to take a down round if you're one of the hyperscaling companies? No, nobody is. Nobody wants to lose. So, like, GameStop took a down round, okay? Let's just do this, okay? I want to talk about it before we step into Carvana and Root. In the world of AI, in the world of artificial intelligence and how people are spending money, I told you this like a year ago, companies are getting rewarded huge valuations for the amount of money spent on AI, on the infrastructure itself. So we could build anything we want. We could spend money on servers. We can spend money, on these large language models that they have. But here's the issue. What value are you going to get for it? Like, what type of revenue are you going to get from it? Nothing. And I'm just telling you, it's absolutely nothing. Because no one can show me profit for the money being spent. And this is the problem I have with Nvidia, being the largest company in the world at the time, just last week. And I said, there's just no way, $3 trillion, because people are spending money with them is one thing. But what profit are those companies making? At some point, the companies just stop writing the check. They're going to take the down round, right? That's what I'm trying to tell you. Someone's willing to take it on the chin, like Nike, okay? Nike reset their whole world. They said, you know what? We're going to report bad numbers. We're also going to tell you this is transition, and we're going to go the next 3 years, and we're going to try to fix it. Intel is doing the same thing. You see, I was looking at it in a different way. I wasn't understanding a couple of things just a couple months ago. A month and a half ago, Intel announced that they were going to suspend their dividend, and they're no longer, doing this AI catch up or try to keep up with the Joneses type style. Intel's a $100 billion business. It's not like some mom and pop. It's a real business, a viable business, but it's operating at a level of where, you know what, we're not going to play this game. Intel announced its earnings today, and I think they're taking a down round because they're eventually going to win. They're eventually going to win because they're not doing what everyone else is doing. Intel suspended a dividend so they don't give out their cash. Not that they don't have cash, it's because they want to hang on to their cash for the right reasons at the right time. It's my assumption right now. I've seen Warren Buffett do it. I've seen other executives do it. The two things I have a problem with in this investment world that don't make sense, they're anomalies, guys. This is not a GameStop issue. Remember, guys, this channel, GameStop, great. That's what people think this channel is all about. Like, oh, it's just GameStop. Oh, he's just a pumper of a stock, blah, blah. They don't understand the education of connect the dots, private equity, and the leverage they have on publicly traded companies. But think about the misrepresentation of this market. There's two companies. One is Nvidia. And I tell you this with all the heart that I have. If Nvidia believes that they're a company that's going to be around forever, and that these levels are sustainable, and that they're legit on the books, and they're not round-tripping their revenue, and they're not investing into smaller companies that are in turn investing into them, and just circulating the same cash. If they believe they're doing everything on the up and up, then explain this to me. Why their CEO and all of the board of directors, all of them, are selling their shares. And every single senior investor in that company, Citadel, other huge investors, sold their shares this quarter. If you believed in your company, Jason Hung, if you believed in your company, you're the CEO, chairman of the board, if you believed in it, why are you selling shares right now? And I'm talking about $1 billion worth of shares. You see, people say things like this. He's worth $100 billion, Marantz. Who cares? He just sold $1 billion cash. No. You're only worth what you have. You want to liquidate what they say you're worth? Let's see how much money you actually get out of it. You're not going to get much out of it. Because once people start seeing you start selling, they're going to be like, oh, he doesn't believe in himself. He's held the stock for 25 years. Now he's taking profit. See, your salary's not enough, right? No, you need to cash out on what this is. This mania. See, I got a CEO at GameStop who doesn't cash out on mania. When GameStop runs up in price and it goes crazy, he dilutes the company even more. Produces more money for the coffers. He doesn't care about the $2 billion he might be worth off of it. Do you know how much money GameStop would lose and Ryan Cohen would lose if Ryan Cohen started selling shares? If Ryan Cohen started selling shares, this thing would come crumbling down and people would be like, well, if he doesn't believe in it, why should we? But why is it that every other company that's selling more shares than they could ever imagine, they're pocketing off of a run? And you're telling me you want to come to the table, do an earnings report and say, hi guys, my name's Nvidia, and guess what we're going to do? We're going to be amazing for the next 10 years. The next 5 years. We're innovating. We're going to be the leader of the industry. Everybody's going to do business with us. We're a juggernaut. Okay, so then why the hell are you selling shares? Because if you believe the information you're saying, then maybe you should sell your shares 5 years from now. No, that's not the way it works. See, it's not Apple. It's not Walmart. So those companies have plateaued. Those companies are at the brink of it. They go up with the rest of the market. So yeah, you sell some shares, just your annual salary, no big deal. That's not what they're doing. There's two companies I'm talking about right now, guys. I want you to focus on. Because they're doing the business the same way. Nvidia is pumping their own company. And how they're doing it, the rest of Wall Street is all along on board. They're all pumping the smaller companies that are investing into Nvidia. All while the executives at the top are selling their shares. That's the red flag for me. You're going to go out there and sell $2 billion worth of shares, insiders? You think this is a good thing? I saw Warren Buffett sell off billions of dollars, billions with a B, of Apple, Bank of America, and anything else he can get his hands on, cash, selling, because he wants cash. Nvidia, they're a problem because they don't believe in their own story that they're trying to sell to the people. Let's go look at the other problem. The other problem is right here in the charts. We're going to go right to it. Don't worry, I already proved to you, okay? The Supermicro Computer Inc., they're the fourth largest buyer of products from Nvidia. And what just happened? What just happened, guys, to their stock? Falling to the ground because auditing. Because people are really investigating where the money's coming from and where it's going. And Ernst & Young, E&Y, they don't want to put their name on it anymore because they'll have no credibility whatsoever. It's okay. Carvana's next. Let's go look at Carvana. Now, Carvana, first thing is this, guys. Earnings report comes out yesterday, and apparently they beat whatever. I have not looked at it yet. We're going to look at it today. We're going to talk about it in detail. I'm going to break apart everything. But before I ever look at a balance sheet, before I ever look at an income statement, before I ever look at the cash flow chart, before I do any of that, before I ever look at this nonsense, this pump and dump, I look at the leadership. And before you hear the earnings call, which we're going to listen to, before you hear them tell you all the glorious things coming their way, I want to remind you that their CEO has sold almost $500 million in stock. $400 million at a minimum this past month. And then he's going to come and tell you what? The company's going to be amazing. It's going to keep doing what it's doing. But he just sold $1 billion, $500 million of stock. Do you know why, guys? Because this is the value of Carvana. This was the value a year ago, 2 years ago, $3 a share. Now it's $255 a share. This pump that you see is a manufactured pump. And it's via a small company called Root. There's an insurance company out there that Carvana invested and bought 5% controlling stake into this company. This stock was $3 a share. And BlackRock bought into it. But how the hell did they pump out from $530 a share all the way down to $3 and people thought, oh, this is a good investment to make? Or maybe this was prime picking. You remember that I study things. I study people. That's what connect the dots is. So beyond just the price action you see and the pump, we're going to look at financials. We're going to look at the projections because the whole point is there's a CEO over here at Carvana. If you guys are not familiar with their CEO, we've talked about the management team here. But the thing about Ernie Garcia III and how they all of a sudden decided this was a great thing, that one car company is going to beat out everybody. And we're talking about their margins per auto sale are 3 times that of the competitor. Guys, go buy your cars at CarMax. Go buy them at cars.com. Go buy them somewhere else if you're buying online. You buy them at Carvana, you're paying 3x more than the next guy. And we're talking about in fees. Not in the car itself, but in fees. Do you know who's on the board of directors at Carvana? For all you guys out there that don't know, and we've talked about it on this channel, and you should know, before we even go into this, Dan Quayle is on the board of directors at Carvana. This is not a coincidence. The company went from hundreds of dollars a share, $500, $400 a share, all the way down to $3 a share. And nobody batted an eye. Nobody got scared. Nobody sold shares at the top. No. Let's get ready for what we're about to do. The crime of the century is Carvana. Right next to Nvidia. They sit hand in hand. And I'm going to tell you guys, I had to go do it myself. You guys know I'm crazy about connect the dots. I go in there and I look, a no-name company filled with DEI hires. And then we go through it, and you know what? There's little breadcrumbs. And if you know what they are and you know what you're looking for, you can see it too. This is Root. That little insurance company that was $3 a share that BlackRock invested $400 million into, $300 million into, and Carvana bought in 5% of this company. Do you know what they're pouring back in? This is why. This is why Carvana's price action is so high. Why they can show profits based off of their little investment. Remember, they made an investment of $126 million, guys, when the stock was down at $5 a share on Root. If I want, guys, I gotta make this make sense to you so you understand why Carvana's running. It's not about Carvana and the deals they're making and the cars they're selling. Are we clear? Listen. Carvana invested money into Root, $126 million. This company now has, and at the time when they did it, 5%. Oh, you know what? Let me give you the exact date. I have the date. Let me, hold on. I want to make sure I have everything for you. It says right here, we know that it's only one, it's like nothing of their IPO price. Root closed in on $300 million deal, 5-year term loan with BlackRock. They just renegotiated that 5-year loan, five-year term loan with BlackRock. That's why their price went crazy sky high. But that's what was announced yesterday. But I have some, I want to know this right here. Oh, hold on, I have something I want to go read. I want to find out who this is. Okay, cool. But Carvana invested 126. The deal initially formed. Okay, in 2021, CTO, boom, 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 through December. In August of 2021. August of 2021. All right, so let's go look at this chart really quick. And I want to go look up that guy's name real quick because I just saw somebody's name, somebody new. So August of 2021, right here, okay? Right in here, right here. So they invest their money into the company, 5%. And you say to yourself, why are they buying it at $100 a share, Marantz? They're even now on their investment, right? They're even on their investment. How is it that they could go up in value based off of their investment in Root? Is it just optics? Did they buy more? Was it just the initial 126? You see, I have all these questions because it rides out with Carvana's timeline. Carvana went down in value. The minute they buy Root, they go down in value. Remember, they bought it over here in August of 2021. So they buy it, and their stock goes down with the same speed and energy that Root goes down. But all of a sudden, BlackRock pumps in $300 million, $400 million into Root. See, here's what I'm thinking. I'm thinking that BlackRock, and I have to look at this, I have to go see it. They have a significant amount into Carvana since that date, since they bought Root. Because if BlackRock buys Root down here at the bottom at $3, they get to pump their own stock, and they get to pump Carvana with it. That's what I'm seeing. See, the investments by Carvana don't matter. It's the outside investments. But why is your CEO, now that it's sky high, the best it's always been, it's got everything back, why is he selling off $400 million worth of shares? Why does he feel he should be making $400 million? A year. Guys, a month. He did that this month. I've shown you transactions. So, here's where it all comes down to, okay? Comes down to leadership. This is where the red flags come. So I go look at the board of directors first. We'll look at Beth. And Beth is right here. And she has, right here, her variety roles at Expedia. Expedia.com. A travel website. I don't know what that has to do with automotive insurance, but I know what Expedia has to do with private equity. We've talked about it on this show, Connect the Dots. I don't know why my ear's itching, because I'm getting old. Hair's growing in there. I don't know. Jerry, how you doing, Jerry? ADT, I don't know much about security companies, but she comes from Office Depot. Office Depot, I already showed you, private equity. How about Harrah's Entertainment? Private equity. Oh, she's also got on Nokia and Verizon and Citibank. Does any of this sound like she should be serving on boards and senior marketing roles for any of these companies? And you know what I've always asked myself about these individuals that jump around from director to director is why are they always getting new jobs? Like, if you're good at your job, like I seriously, the CEO the company I work for, the CEO's been with the company 40 years. 40 years. The previous CFO had been with the company for 40 years. I don't understand why these guys get new jobs every 10 months. Another director here, Miss Dorsey, works for Sears Company. Sears. I'm not making it up, guys. You got to ask yourself, what the hell is retail doing en route? Larry, I can't even tell you how many times I've tried to connect the dots on Scott's Miracle Grow Company, but for whatever reason, they're everywhere. We talked about it, guys. I don't know if it was with, it wasn't with Big Lots. Who was the other company that was going bankrupt that I was paying attention to in connection with Big Lots? Somebody else was with Scott's Miracle Grow Group. And whenever I see Scott's, I'm like, how the hell does that show up? But hey, it's here. It's here. I don't know how it showed up again. But I've got to figure out that connecting dot between Scott's and everyone showing up to a private equity play. Nancy, I don't know who you are, Nancy Kramer. You're from IBM? Cool. Not too bad. Maybe this is a real hire, or maybe it's not. Maybe I can go do some more homework on somebody like this. I'll check it out, though. I'll play dumb. Julie, I've seen you before, Julie. You're at Self, okay. Groupon, we've talked about them because it's Expedia as well. And that's via Orbitz and Anderson Consulting previously. Yeah, Julie. You can't hide too well. You're hiding in plain sight. This is the co-founder and CEO, Alexander Tim. Good luck to you. You're on board of directors at Go Health. Go Health is bought out and taken over by private equity. If you do not know about Go Health, go check it out. $1.5 billion investment from another private equity firm. But Alexander Tim, what do I know? You're on the board of directors with them. So that's cool. And you run this little chop shop called Root. Doug Ullman. I don't know much about you, Doug. I'm checking you out. No, it doesn't look too bad for you, Doug. But hey, one can get in there, I guess. So I'm okay with the board of directors, with the exception of all the private equity on it. But we'll go to management team next. The actual people that they hire. I'm trying to figure it out. You guys help me. Look at Jason Shapiro here from Cox Automotive. That sounds automotive-y. TrueCar. Remember about TrueCar? We've talked about this when we talked about, Carvana. You'll see it right now. So as I go through, I don't know, Jill, what are you doing? Oh, you're from leadership roles at Express and Lane Bryant. Aren't those private equity? What the hell are you doing here, fashion consultant? I don't understand. Hey, Matt. How you doing, Matt? Matt right here is Matt worked in high-frequency trading and statistical arbitrage at Citadel. And you're the chief technology officer here at Root. Citadel, how you doing, bro? Like, I can't make this up, guys. I try to, but then we'll go look at the management and leadership teams of right here, of these bad boys. I can't believe Dan Quayle's over here. But Drive Time, cool. Well, who else are you from? I like that. I like the fact that is an auto thing. Dan Quayle, Cerberus, right here. Cerberus Global Investments, guys. Private equity. I hope you guys know who they are. Cerberus Capital Global Investments. Well, just so that we're clear, and I had that other dude's name that I really released that I want to go see. Let's go right here. This is, hey, guys, Google works, believe it or not. Check this out. Cerberus. All right. Boom. You go look in here. Steve Feinberg, co-founded in 1992. Hey, guys, what happened in 1992? What happened in 1990 that these guys couldn't form until 92? What? Help me. Help me. George Bush was in Cerberus Capital in 1999. No, he wasn't. It was Dan Quayle. My bad, bros. I'm reading it too fast. No, but I know about this company. We've talked about them before on Connect the Dots. Dynacorp, yep. This is real private equity. Owned Albertsons. Great. They did a deal with Albertsons. You guys already know the deal between Apollo and Albertsons. They did a partnership with Avon products in 2015. General Electric. These all sound like private equity deals back and forth to each other. So, but yeah, I know everything about that nonsense. So whenever you see the name, it should light up for you. Albertsons, Kroger, that deal. You should know about it. But it's too bad that they're in Carvana. Okay, so back to Carvana. I just want to read this nonsense here. Spyglass. I want to know who founded them. What did he say his name was? What's his name? Steve Feinberg? Yeah. Where did he come from? He owned that. Nah. Where did he really come from? Oh! That's why. After graduating college, Feinberg worked for a trader at Drexel Burnham Lambert. Drexel Burnham. Connect the Dots part 79 right now in front of you. That's what it was. So yeah, forgive me for Drexel Burnham Lambert. The leader and the founder of Cerberus Capital worked there. What are the chances? Ira Platt. How you doing, Ira? You're from automotive stuff, right? You know about automotive stuff. I know you do. You're an automotive guy. He's the president of Capital Partners, LLC. Like, it's wild. They work for an automotive firm, but they know nothing about cars. How about this young lady, member of Expedia Group? Started with Expedia Group. Hey, guys, I wonder why all the people that work at Root are from Expedia when the board of directors over here at Carvana are from Expedia as well. I know, maybe I'm crazy. This guy, oh, at least it's AutoNation. That's cool. Cox Automotive. Are you Cox Automotive too? Board of directors at board of directors at Root are from Cox, and so are the board of directors at Carvana. Oh, man. That can't be real. Ernie, how you doing? Drive Time, are you from True Cartoon or are you just from Drive Time? You and your dad, you guys did it right. Great job. Hey, bro, you're worth $500 million. And I hope you're selling your bag full of shit to someone else, bro. Mark Jenkins, how you doing? From Wharton Business School. Wharton, you got nothing to do with anything in automotive, right? Cool. I just wanted to make sure. Maybe I'm wrong. Latham and Watkins, I guess you're good. You're okay. The used car salesman over here. Daniel Gill. He's a product guy from Hudler. CEO of Hudler. Co-founded and served as CEO of Hudler. Who else was at Hudler? I just read that. Didn't I read that? Somebody from Hudler? One of these guys is from Hudler. Right? Who's from Hudler? How the hell did you hire your old CEO and give him a job? Somebody's from Hudler. I read it. I'll read it again. I'll see it again. I'll go look at it. I don't want to do it on your time, guys. I got to get going in a minute. Before I even get into the earnings report, it's going to be what I do when I get back tonight. I have things to do today, guys. At least that guy works in automotive. True Car and all that. Okay, cool. And then this young lady, Carvana, that's good. Hey, she's from auto industry. Talent from Benchmark Capital. There's a problem for me. Executive Vice President of Strategy, Christine. I don't know. Are you dating Ernie? I won't. I'll leave it alone. All right, so we know where we're at. Drexel Burnham Lambert offspring right here in Carvana. Is this the call? That's the call. Play it later. Supplemental financial tables. Let's see. How's it looking for them? Retail units sold. So that was in 2022. Great. Wholesale vehicles units sold. So they're selling wholesale unit vehicles and wholesale marketplace units sold. 234. So that's down. But yet we're up sky high in price. Cool. Because they're up in wholesale vehicles. And retail units sold, they're up 108. Huh. Hey, 108. Isn't that crazy? They sold 108,000 cars, guys. All they're showing you is increases from 76 to 91 to 101 to 108. But that can't even sniff the 117 they sold in quarter two in 2022. Do you get where I'm coming from? Yes, isn't that crazy? So quarter of 2022, I'm just curious on this right now. They sold more cars on wholesale. But all they're doing now is selling wholesale marketplace units sold. All they're doing is selling wholesale cars. They're not selling to retail. Not what you think they are. There's no growth there because they're actually down from the last 2 years. So 117, the amount of cars they sold back then, and I said 108. So 117. Huh. I got to go look at the chart again because this is how it works for me. I got to go look and see what was the stock price when they were selling that many cars in 2022. In 2022, when they announced they sold that many cars, the stock price was $8. Only reason their numbers are up because they're selling wholesale cars. That means they're not doing the business model. They bought junk vehicles and they're selling those. Unbelievable. Think I'm crazy? Let's go see what I know. There it is. How? When you sold more cars here, how are you double on value here? Somebody's pumping these numbers, dudes. The wholesale. It's wholesale. Look at retail. Retail automotive right here. Revenue. Retail right here. They actually were selling 2.9 retail revenue versus 2.5. Yet their retail cost of sales are down. So they have a better net margin, more profit at $380 million of profit. What in the hell? Did I miss something on cars? Retail revenue, $25 billion. They're down $2 billion. But they're making way more money per quarter. Per unit sold. Retail GPU, yeah, per unit. 3,600. No way. I don't understand. Wholesale vehicle revenue. The same, even less. Cost of revenue. They're making $61 million, so they're doing it more proficient. Units per sale. Okay. Retail unit sold. Per retail unit sold. $5,000 and they're charging less. Okay. So they're making $571 per car? How's that amazing? Retail, per retail unit sold. $3,000 per car. Right there. 23,000 is the average. So the price of cars are coming down and their cost is going down with it. I don't know. I guess they are making money. Not enough. No way. That's not enough. 60 million? That's not even 60 million. Yeah, $60 million. But it's the wholesale that's making them all this cash. Look at this. Wholesale per unit is $552. I got to get to the bottom of this. $2,900 per unit sold. Root Warrant revenue. Root. Huh. Root. They're paying Root per vehicle? Per unit sold, they're paying Root $55. Okay. I don't know. Total SG&A is up at 406. So per quarter, the SG&A is going up. Compensation and benefits went up. Advertising is the same. Marketing, logistics, 469. Okay. Not bad. They got some back. Additional SG&A expense. Retail and wholesale vehicle operations, 188 million. 147 overhead. Okay, so where's the total there though? Oh, it's right here. Per retail unit. So their compensation and benefits, advertising, boom, boom. Total SG, the expense per unit is $4,300. When you take away that, okay, so 37. Is that per unit? What the hell? So they were paying $6,000 per unit before? That makes no sense. Restructuring includes costs related to our reductions in force, as well as lease termination of other restructuring expenses. Additional SG&A expense, detail represented here in the relocation SG&A. Overhead expenses tend to be more fixed in nature, although they're also semi-valuable. Okay, we're good. I'm gonna be taking off, guys. I haven't looked at any of this. That's just the sheet they send you guys. Net income in quarter 3, 2024 included a negative $26 million impact from decline in fair value of our warrants to acquire Root common stock. They're still buying in on Root. They're the ones pumping Root. $26 million. Root warrant revenue represents a non-cash impact of earning Root warrants associated with our partnership with Root. How much of Root do they own? Oh my God. It's Root. Oh, bros. I got you. Let me see. Fintel. Fintel tells me, oh no, what's the other website I like? Is it it was institutional shares long short. Okay, so it's the largest shareholders include Ribbit Management Group. Who the hell is that? Copy them real quick. BlackRock, we know that part. Morgan Stanley, Root Institutional Ownership, blah, 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 blah. Fundamental score, no. Root. Carvana. So Carvana owns 7 million shares, almost 8 million. Previous shares of their so these guys sold all their shares. I didn't know who they are. They're smart. And Drive Capital Overdrive Fund sold 28 million shares of Root. Silver Lake sold it all. Silver Lake sold out of there. Guys, come on. Private equity's in there. 9 million shares, Silver Lake. Goodness gracious, bros. It gets better. Oh, man. BlackRock, no. Morgan Stanley, no. 300,000 is nothing. Okay, so there's two groups I got to look at. Don't care. Let's go. Who the hell is Ribbit? Ribbit Capital. These guys are huge investors into Root. Denise Gilbert, blah, blah, like who are these people? Oh, I hate when they give me all of them. Like these kids over here, like dudes that just graduated, like Gabe, you're not gonna do anything. You're nobody on this team. It says team. How you doing, Denise? What do you do, Denise? I'm just curious. Ribbit. Administrative manager, executive assistant. So you don't run anything at Ribbit. But you come from Yahoo. Oh my gosh. Oh my God. I'm okay with that. Who's running the show here? Who looks like they're running the show? Is it Mickey? Mickey, how you doing, Mickey? These guys don't want to tell you who they are. Board member, Bitcoin Foundation. Oh, God. Okay, good for them. Don't really care. Is she running it? She's too young. Some of them look too young. Like I just won't even click on them. Ben, how you doing, Ben? Ribbit Capital. TGP Global. There it is. TPG Global. Private Equity. Lehman Brothers. Oh, brother. Brother, you're the CFO. This is you? And your idea was to invest into a little company called Root. Allison London. Morgan Stanley. JP Morgan. Oh, you're just an executive assistant? Paramount Pictures. Sotheby's. Okay. These guys have prominent titles, bro. Find me the right person. I'm just looking. Max Ryan, you look like a little... Like you're going to go watch somebody's car, Max. CarMax. Isn't that a website? PWC, right there. Family Restaurants. Who puts that on there, bro? Commander's Family... Like, what trust fund baby is this? PWC? Cool. Darwin, I don't know. So, okay, so there's more to look at here, but I'm not worried about them. I want to know who the hell sold out and ran away. Who was that big company? Drive Capital Overtime Fund. Like, who is this? And why did they get the hell out? All they've ever owned is Root? And they just make money? Who is this company? Guys, this is where we have fun. I know some of you guys don't find this fun. Some of you guys are like, Marantz, I'm leaving. I can't. You don't know my life. You don't know my life, guys. Here's the form 5 years ago. Drive Capital Pitch Bank. Jones Day was their lawyer. Okay, don't care about Jones Day being a lawyer. Let's go look at their damn, their whole form. Drive Capital Fund, LP, Limited Part. Related persons, Christopher Olson is the CEO. Mark Cravey is also Pulled Investment Venture Group. Who are these people? Sales compensation. No, don't care about that. Two dudes? The attorney is Edmund Appleton. Don't worry about it. He's signing it with he has power of attorney. I'm not worried about him. I want to know who these guys are. Who the hell are you? You guys want to follow the crumbs, guys? Of why Carvana's doing some bullshit? An American TikToker. That's who I got from this? What were they called? Drive Time or something? And he has a wife. I found you now, bro. All right, let's go see what they're all about. San Francisco. How do these guys know to make this kind of money? Invest with the right company. They're just telling me a bunch of nothing, dudes. Roots IPO is a windfall for Drive Capital, Ribbit, and other venture capitalists. Our founding story. So there is two guys that made it big. Drive Capital was started investment in Midwest startups. So these guys made it big. They're the ones. Bought out, and then they bought out and they sold out to private equity. Can I get to the end of the story? I got to watch this whole thing. Because the end of the story is that they sold out to private equity. They made a whole YouTube video on this? I got more views than you, bros. What the hell? I got to watch that later, guys. Masterclass of Venture Capital with Chris Olson. Oh, I'm going to watch all this shit. These guys like their own press clippings. Cool. All right, so you're Chris. Our team. No, don't care about them. It was Chris Olson. What was the other guy's name on the form? Mark Cavimy. I don't see him here. Is it alphabetical order? It's not. Did he take off already? He took off. Mark did. Mark's not here. Just want to make sure, guys. That other guy, his last name was Root. Yeah, their website's just too much for me. But I'll go through it all. I'll get through it all. I just want to know who these guys are who made a killing. There he is. Worldwide partner. There he is. When he was 23. Silicon Valley, Apple at 23. He was a product manager there. Sequana Capital. Leading investments. General partner at Sequana. You guys know that they short GameStop, right? Jack Dorsey in St. Louis. Larry Page in Chicago. Okay, good for you guys. Yeah. All right. There's two dudes who got lucky, I guess, right? That's what we'll call it. What's his position? Partner. All right. I'll check them all out. I'll keep going through all that. Okay, I got to take off, guys. There's still more to the story of Root and how they made all their money, and Carvana, how they're making their money. Carvana looks like it's just pumping up off of warrants that it's getting from Root. So I got to keep going more into it. I have an earnings call that I got to listen to, and I have this letter here that tells me they're just so successful. So let's see, net income of $148 million with an income margin of 4%. Carvana sold 108,000 vehicles. They claim they're up 34%, but as I've shown you over the last 2 years, they're actually still down. They're not up. They're just up from terrible years that they just previously had over the last year and a half. It's embarrassing to say that. I hate when people do that. Year over year, you're really not up, though. Sequential increase in year-over-year growth, retail units sold, and adjusted EBITDA significant above high-end previously range of $1 and $1.2 billion for the full year. You think you're making $1.2 billion for the full year of 2024? Am I mistaken here? That is crazy talk. But hey, I'll leave it where it's at. Net income right there. So net income for the 3 months ended versus last year, they're down on net income. From 741, they're down to 148. I don't understand. Interest expense, because they have debt of $6 billion, they actually have to pay out $157 million versus 153. Loss gain on debt extinguishment, negative $878 million, and then operating income is 337. Other expenses. I don't understand their math. Well, I do. Depreciation, blah, blah, blah. Adjusted EBITDA, 429. Oh, God. Share-based compensation, 23 million versus 18. They're paying out more. Total revenues, they're up on total revenues. Net income margin, 4% versus 26 the previous year. How? How is anybody believing this shit that they're doing better and they're not? They're doing 10 times worse than last year. But, I'll leave it alone. I'll let their investments speak for them, I guess. They give you a sheet that they only want you to read. Record adjusted EBITDA of $429 million. Drives industry-leading 37% year-over-year retail unit growth. That's a problem. 34% on retail unit growth is a problem. I don't know. I got to hear these guys out. I know it's crime, and I got to try to figure it out somehow, some way. Oh, by the way, guys, GameStop. Oh, you guys aren't even looking at my screen. I apologize. But GameStop, currently trading on the website. They were at 3,400 cards. They're now at 3,200 cards. So still selling a lot of cards, doing their thing. Just want to give you an update on that. All right. Anyway, got to go. I know I was supposed to read in the chat today. I didn't get a chance to read it all. I've been really busy trying to get out. So, Citadel Security sold, not yet purchased. GameStop collectible card. Nice hat. Yeah, it's your hat, baby. Lexi took your truck, FYI. Just don't worry. You're getting breakfast out of it. Love you back to work. She took my truck. My daughter took my truck and didn't even tell me? The hell? That's cool. I don't care. Truck's there for the taking. It's for the whole family. Hang some light fixtures, but you're in my ear. That's cool. Cheers to you guys. Brian went ahead and blessed the channel with $200-something worth of donations today on Super Chat. So cool. That's cool for you guys. Been a long time. Love. Thank you so much. What's up, Marantz? How you doing, brother? JT, I'm doing great. Carvana is Scamvana. Yes. Watch Apple and Amazon finish off the market tonight. Imagine we got a position update from someone while the market is burning. Yeah. Just imagine, Chris. All these companies need to be dumping cash into GameStop shares. Yep. Do you hold Bitcoin, Marantz? No, I do not have any cryptocurrency. I don't buy anything other than GameStop. It's 100% cash in that portfolio that I have, other than my other portfolio, which is not for public consumption. And why? Because it's my portfolio with my retirement stuff in there. It's all this other stuff I have. So it's not for you guys. But, and I get gifted some stuff in there, so it works out for me. F the haters? Well, of course. I want to see you win after I said, E-Money, thank you so much, man. When I said that, people just want to see you lose. Yeah. Typical PR does have a major landfill issue that's been in the news. Mentoring, not digging into citizen stuff. Oh, yeah. Well, I'm going to say something on my way out. I want you guys to watch a video on my way out for sure. I have one that I want to play. It's good stock, though. Their moat is very solid. If Trump wins, GME is going to go fly. We'll see. Yeah, Copart stock, is that what you said? I have no idea, bro. Ruined junkyards, I hate them. Yeah, I won't be. You can't. Do me a favor, JT. I know you're excited about stuff, but don't tell me what's a good. Don't do that. I don't need any distractions, babe. You could take your time and type it. I mean, whatever. I'm not gonna tell you what not to do that way. I'm just gonna say it doesn't matter. People can show me, all right, man, it's a great. I'm like, no, it's not. GameStop's a great investment. I got my one share of GameStop today and posted on the Discord because I can't. You're the best, bro. I paid more in fees than that in the car, I bet. Just tuning in real quick. Gonna go to the gym, of course. Let's get rich millionaires. We should be filling in that gap at 2283. After that, who knows? There you go. You're slow to the game. You tell them, bro. I wouldn't say I'm in a cult. I just like the stock for a couple of very material reasons. That's why I make up over 80% of my. That's why it makes up over 80% of my portfolio. JT, I want to show you something, bro. Okay. Just so that we're clear, right here on the charts. This is my position here. Let's go ahead and refresh this. Oh man, I gotta type it in. Not while you guys watch me. That's for damn sure. I have people out here trying to guess my password, bro. That ain't never gonna happen. Boom, boom, boom. Boom, 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 boom. Am I in? I'm in. Okay. So I'm down Well, I'm at $20,000 plus. I'm plus 20,000. I have $22,300 into the account. I'm at a cost-based average of $24.15 a share. And just so that we're clear, on my returns for this investment, if it can ever load. Let's see. Oh, I'm looking at Root. Yeah. Don't even talk about top gainers, Root. I know the truth. I'm going to find the truth. And well, I already have. I already know you guys are liars. Is it here? Where is it going to show me that, like, it was supposed to show me that, like, I'm beating everybody. You know, the whole market? Where it tells you, like, you're beating everybody? I had that up here before, right? It says, Marantz, are you beating everybody? I said, yep. But I don't know where it's at now. It would tell you, like, my daily, my yearly, my everything. Oh, well. I'm like at 80-something% on the yearly for the year. And year to date, I'm at like 32%. But my point is I'm beating out the S&P 500. But we'll go in here. We're going to look up Root. You know, I'm curious on Root. I just want to go look them up. Let's look on. Do they make money? I mean, the price is going crazy, right? The stock's crazy. Financials. See, total revenue, $300 million. Cool. Operating income, $34 million. Awesome. Net income, no, there we go. It's 30-something million for the quarter. The balance sheet tells me they have some cash. Their total assets, 1.5. Total liabilities, 1.2. Retained earnings of negative $1.7 billion. Shareholder equity of 293. So 293 million on how many shares? Doesn't tell me? Why does that tell me? Oh, shares out, 15 million. So they're doing around 10. Holy hell, guys. Think about Root for a second, guys. Only 15 million shares out there. What the hell did we just see? Oh, man. Is this crime? Is this crime? $1 billion. We saw them. Are you kidding right now? 315 million shares. Did they do a reverse stock split? Root has a one split. Our stock Root starts with database. The split took place. It was a one. Oh, there it is. There it is. A 1-for-18 reverse stock split. Oh my God. In 2022. When did they buy it? A year before that. Oh, this is gross. 15 million shares. It didn't make any sense to me until right now. I was like, what the hell? I'm going to make it make sense to you guys right now. They are trading. They are at 18 times book value per share. Oh my God. 18x on book. Holy shit. Oh my God. No, that can't be right. Is it $18 a share? Oh, okay, yeah, there we go. They're $18 a share book. Okay? Oh my God. So if they're $18 a share book, yeah, that's what it is. Okay, cool. Whew, I almost had a heart attack, guys. I can go look at it again. Let me just go look at it again. Let's just go look at this really quick, just so I know. It's going to be on the next sheet. Balance sheet. Okay, cool. It's right here. Book. Look at that. $12. Okay. So they're $12 a share book and they're trading at $90 a share. So 6, 7, around almost 7x book. You can buy it. You're buying hot air. Hell no. 7 times book, guys? That's almost as bad as Carvana. Like, guys, I'm going to show you guys something that you guys, if you guys ever want to know why I'm not a big fan of Carvana or why you should ever buy it, look at this, okay? So look at the price. You guys see it. This is the truth about this company. This is their cash. These are their assets, 3.7. This is trailing 12. We'll go quarterly. How about that? We'll go right now up to the quarter. Right here. Amazing growth. 3.7. Total assets is 7. Liabilities is 7. Return earnings is negative 1.4. And they literally have shareholder equity of $286 million. Their book value per share is $4.83. Okay, guys? $4.83. The price is $255 a share. You are looking at a company that is worth nothing. I can't. I just can't even understand this. I'm trying to. $255 and $4 of it is book. Let me go back to here. They trade at 100x, 80 times the book value. Well, they were at 100 times book value, but now it went up. So they were, it was previously 100. No way, dudes. 100 times book, and they want you to buy it. That's not real. How? Like, I want to explain something to you guys that, like, you guys should know and do your own math and do your own, like when you look at companies like Apple, okay? Apple comes out, Apple's $227 a share, which is fine. They have a ton of shares. But when you go down to shareholder equity for like all of the sentiment in the world, this company's been around for years and years and years and years and years. Apple's at $4 a share book. Okay? For Apple to be at $4 a share book, and so is Carvana, do you think you're paying the same? Like, you're paying the same ratio, if not more, for Carvana than Apple. Carvana's more expensive than Apple per share. This is crazy, dude. And based off of what metric? Like, what is it? Is there like some technology that I don't know about? They're just selling cars, right? When interest rates are sky high, like, shareholder equity of $66 billion, and you're at $4 per share book. You guys know that I don't believe in Nvidia. Nvidia's the worst. Like, I just don't even think it's real. But Nvidia's book is $2, right? It's even worse. It's $238. But the price is not. It's just as much. It's half of whatever that one is over there. Like, these are the most inflated things ever. That's what I'm trying to show you. Like, when you're buying something, if you want to buy like a credible company, like even if they say Tesla's overpriced, right? Tesla, $252. Well, when you go to Tesla's financials and you go to their balance sheet and you go down to their book, like, how much are you overpaying? You're not. They're at $21 a share. They have equity within the company, $21 a share on Tesla. I know, separate. No, they sell cars. What are we talking about? It's the same damn thing. But Tesla's at $21 book, and look at the price per share. Like, that has weight. You're paying 4 times more for Carvana than you would for Tesla. 5 times more. Like, no. things are oversold, overbought, whatever it may be. It doesn't make sense. What does make sense is people not to buy this thing at $22.84. $22.84, and the book itself is at $10.28, and that's not real. It's way higher than that. It's even at $11. Man, wait, you guys wait. Imagine if this traded like Root. Imagine if this traded 7 times book, or like Carvana, where it's 100 times book. Literally almost like 100 times book. Like Carvana's at like 60 times book. Like, could you imagine buying something so overpriced? Whatever, too much sense. What book are you buying again? One where Dan Quayle's on the board of directors? One where the CEO is selling $500 million in shares and telling you his company's going to be great and it's going up? That's my point. Nvidia, their CEO selling off $1 billion in shares, and all the insiders selling off $2 billion. And then you have Carvana, where everyone's selling. The CEO's just shipping it out right now. And then he's going to tell you in an earnings call that we're going to play when I get back that they're an amazing company and that they're going to do so well for years to come. And if they were, then you wouldn't be selling your shares. That's just the truth. So anyway, I'm just reading that. Just stopping by, hit the like button, guys. We'll play it back later. Happy Halloween. Yes. What's happening? Marantz and the team. There we go. Just for fun, I looked up my car to see what it's worth on Carvana. Would give me for my car. It's $7,000 less than what Kelly Blue Book said it was worth. Oh, I believe it. Lexi took your truck, FYI. Don't worry. You're getting breakfast out of it. Love you. Oh, cool. Thanks, babe. All about surnames. Always the same group. Yep. This runs so deep. Plants are everywhere. Yes. 117 cars, what the F? At wholesale. Yeah, 117,000. That was 117,000. This is a bogus outfit. Oh, it's bad, bros. It's bad. Eventually, group 1, 2, there we go. Thank you for that with the AutoNation. Yeah, I'm familiar. Connecting the dots is the best part of the show. Thank you. No matter how nice, I was reading this. No matter how nice they look or act, they're all nothing but a plant to a bigger play. Yes. Yes, they are. Jake Paul in the earnings. Yo, Marantz, what up, man? I'm going to the dealer to get it. I'm going to the floor. Okay, you do what you do, Pops. Watch him work, Marantz. This is why I love Marantz Rantz. Thank you so much. Yo, Marantz, let's play this party jumping. Yeah, Pops, I got to take off, though, man. Marantz, see the Meltdown Boys from Reddit outside your window watching you. They got you in the crosshairs. That's fine. I don't care. You know what? It's Halloween, dudes. You looking through my windows? I'm around. GameStop. Can't stop, won't stop. GameStop. I'll be back, millionaires. I got a nighttime show to do. Bros, I got Clayton Kershaw. Look how many Ohtani cards I have. I have one. Okay. You go over here. And I got Yoshi again. That's his rookie card, by the way. I got 2 of them. I got Mookie Betts again. Mookie Betts. Shohei Ohtani, Clayton Kershaw. Oh, bro, I just collect them, bros. These are things I'm never giving all this shit away. More Yoshi, more Frederick, Freddie Freeman. Come on, bros. We're gonna be here all week. I hope you guys are ready. Hey, and you guys know what? It's still Halloween. Don't ever let me forget, okay? All right. Out. While I'm sitting here daydreaming, you guys are in front of me. This is not like a lie to you, okay? I figured it out, but I need help. Okay, check this out. I need to know what was the website that we would go to look at the float of a company. We would look like it would show you like the shares that are like on warrants. And then you would go to a website. God, I can't remember the website. Oh, it's in my head. There was a website that we used to type into, and it would show you like Bed Bath & Beyond, like the total float. Is it totalfloat.com? Oh, my God. Hold on. Total float. Totalfloat.com. Is that something? Was that it? Total Float LLC? No, it was Free Float. God, what was it that would tell you? Hi, babe. You ready to go? You can come over. It's fine. You ready to go? When do you want to go? Right now?
I want to eat first.
Okay. Well, I'll let you eat first because I'm coming out with something. My head's going. Hey, babe, check this out before you leave. Look at all this that because I collect, right? And I didn't even know that I had them all. So I have Shohei Ohtani, Yoshi, Freddie Freeman. I have Mookie Betts. I have rookie Ohtani's. I have a whole bunch.
Yeah, you have them right there too.
Yeah, and I have his rookie card. I have all his rookie cards. Clayton Kershaw still, and then more Ohtani's. Ohtani, Mookie, Freddie, Yoshi. Got them all. Told you, man. Killed it. So yeah, it's all there. I'm gonna save them forever. Here's what we're giving out for Halloween, by the way. Pokemon cards.
Pokemon cards?
Yeah, here, babe.
Is there candy in it at least?
No, Pokemon cards. What are you talking about? The whole thing. What do you mean? We're not giving out candy. That promotes bad health. We're giving out cards, babe. That's our life. Hey, can you get these guys out of here?
Come on.
Thank you, hon. All right. Talking to my daughter, we were sharing that. She's a Dodger fan, bro. What can I do? Okay, back to you guys. Okay, Dilution Tracker. I love you, Gabriel. I love you. Oh, that was it. Okay. Watch this shit, guys. Dilutiontracker.com. Oh my God, you did it, bro. Hey, shout out to my boy Gabriel, bro. Gabriel from Israel. He's the shit. Don't care about you guys. The company is called Root, right? Check out how my mind was working on this. Okay. Because we read the small footprint on it, right? What does it say? Okay, hold on. Oh, wow. Wow, dude, this company's trash. Okay. Total warrants issued, 316,000. There's the Carvana one. 7 million shares. This is crazy. Okay, so watch this. I'm going to show it to you. I want you to think about it like me for a second, okay? Like, because I was thinking while I was listening to music, I was actually thinking, you guys probably think I just sit here and like daydream, but no, I'm thinking. So imagine if Carvana signs this deal for warrants, right? And look at this, 7 million. And you're like, okay, what does it matter? Everything's in tranches, right? It gets released in tranches. And if the value that they're paying out for shares at the time when they bought the shares, right? They overpaid for like a large amount of shares, whatever it may be. But the truth was they got it all in contracts. They got it all. These warrant contracts, believe it or not, when I'm looking at, from the way I look at it, and even look at the loan warrants itself, that's BlackRock. But here's the craziest part. They didn't exercise any of this until after the conversion of the 18-to-1 reverse stock split. So they did a reverse stock split, and then they run the price up, and everyone's position went up. So a share after the reverse stock split is worth materially more than your shares previous. One share. They're getting a share right now that's reverse stock split 18-to-1. And the value is going along with it. Right? Warrants are getting triggered as they push it up. But if the warrants were never going to get triggered at $5. Never. It's now. So when you read the footnote for Carvana and their profits, it literally said that they're exercising $27 million worth of shares. But BlackRock didn't buy in until after the reverse stock split for a bigger percentage of said company while other people owned less. The dudes that sold all their shares. So like, what the hell? Well, I want to know what the compensation package is for Ernest. This is crime. Yeah. No, we've connected already. I'm just trying to connect finance. There's private equity all in here. I showed the board of directors at Root already. It's all Expedia. It's all private equity people, flat out. But what doesn't make sense is that it's the smallest float ever. It's only 15 million shares. It's being manipulated, and to have a market cap of 1.2 billion, but no volume, 9 million shares, guys, no volume. But it's the whole float. It's 63% of the whole float is turned over. I mean, how much volume could it really have? It only has 15 million shares. That's where I'm at with that. But you're crazy. Finances, total revenue, total premiums earned, operating expense. They literally made no operating income. They made $3 million, guys. Net income, they lost money. That was in quarter two. They lost money. Lost $7 million. Lost $6 million. Lost $24 million. Like, it doesn't make any sense for them to be worth that kind of money. $1 billion market cap when your assets and liabilities and you're coming out with shareholder equity of $200 million and you're at $1 billion? It's embarrassing, dude. 5x your shareholder equity, and it doesn't even matter because they don't even make a profit. But they must have made a profit yesterday. Following swing quarter three profit, refinance loan. That's all it was a refinance loan. Root swung on profit, reported steep rise in revenue in the third quarter. It refinanced its loan with BlackRock, and the stock went crazy. That is just too much. I mean, dude, they pumped it right in front of you. Pulled out that, they just went leverage, $500 million, and what's going to happen? That's going to pay off for GameStop short for a day? I don't know. $200 million over a 6-year loan. That's what they did. They increased their loan facility, $100 million. And that gave them this. The company maintains $150 million available capital, net financial governance. That's just crazy talk, guys. You're telling me that this company warrants this type of action, 200% increase, because they went from $100 million to $200 million on a loan facility. GameStop had $400 million available to them and never touched it. But because these guys have $150 million available to them, oh, so amazing. These guys are on borrowed time and borrowed money. No. You can't tell me this. I'm blown away right now. All right, I gotta do more homework. I'm gonna be taking my daughter to the store. We're gonna go shopping together. We got some stuff to do. But I'd love to hang out with you guys. You guys know that. I love you guys so much. And I played even a damn song break in between. Gold on its way to 3,000. Sure. I don't care. Chipotle down. Huge on earnings. Of course. They're overpriced and no one's trying to get a burrito. You know, if you go into Chipotle today, wear a costume, you get a burrito for $6. Hi, I'm dressed up as a conservative American. Do I get anything? No? Cool. All right, yeah. DJT was worth over $10 billion the other day. More than American Airlines. More than GameStop. Crazy. You know how many assets they had? $300 million in assets. They're worth $10 billion. And people were buying it. I don't understand it. I was like, nope, it's not what I'm buying. Larry Fink and BlackRock are manipulating Root and manipulating that investment. Whoever holds the shares there. Oh, I know who holds the shares there. The price of Root went through the roof today, and that in turn triggered warrants and everything. I mean, just that's what they did. They spiked the price, and it triggers investment. You don't think that Mr. Garcia knew this? That's why he's selling off? They did it. This is manipulation, guys, of markets. I wish the SEC would investigate Root and Carvana. SEC, please listen to me. I know you guys don't want to listen. You guys are hard-headed over there, but there's crime going on over here. And I'm gonna eat my food, and I'm gonna go hang out with my daughter. So You guys have a blessed afternoon. I'll be back later. GameStop can't stop, won't stop. GameStop. Oh my God, millionaires. Peace.